Leaders on the brink of collapse. Former Prime Minister Matteo Renzi says he'll decide today whether to abandon the coalition. Take a look at European futures. That news is not really sending them down. We have some mixed trades going on here, but for the most part, green arrows across the WEIF screen, which is what I use to track the World Equity Index futures. Here's the live trade, the global macro movers screen, GMM Go on the left-hand column. You can see the equity indexes open up. That column will populate as they open up. The FTSE always the first out of the gate, followed by the IBEX. They both open little change. Typically, we see the CAC 40 pop up after this in Paris, and don't expect to see a heck of a lot of movement there either, although CAC futures were up a little bit more than other indexes, gaining about almost 0.2%. But European markets are basically going to open up flat right now, looking for some direction, not a lot of size. You've got a lot of stories out on central banks. Fed officials have downplayed the idea of cutting asset purchases this year. James Bullard and Eric Rosengren said it's too early to discuss pulling back support, putting them at odds with other FOMC colleagues who are open to a debate. Oaktree Capital co-founder Howard Marks told Bloomberg that the Fed moves, as they have done for the past decade, continue to force investors into riskier and riskier assets.
The Fed and Treasury actions, and specifically the reduction of the Fed funds rate to zero, has had a very coercive effect on the market. It has required people to invest because they don't want to sit around with cash, money market fund, bank deposits, all earning zero. They don't want treasuries at less than 1 or high-grade bonds at 2. And so they've had to push out into risk assets.
All right, Janet Mui joins us now, Bruin Dolphin Investment Director, and that was, I thought, a fantastic interview with Howard Marks. Eric Schatzker does a great job, as usual, but this particular point, Janet, is one that people have been making for 10 years. I mean, it's called financial repression. We know it happens. Central banks around the world continue to do it. It's more interesting now, though, in the face of the pandemic. What do you think about this market's continued tick higher as we're all locked down for longer?
Yeah, I absolutely agree. I think the competing use of other assets aside from equity is very low, and we continue to see a scenario of there's no alternative as investors pile into equities. And I think that, well, markets are very encouraged by the vaccine rollout because eventually we know that there will be an end game to the COVID-19 pandemic. We just don't know exactly when. But I think markets are pricing in a lot of good news. And with the Democrats taking the Senate, I think markets are expecting much more stimulus, which is good for the economy, which is exactly what the economy really needs at the moment. So I think that could be a continuation of this positive market sentiment as we see more realization of that economic growth this year. And don't forget that we're actually at the start of economic cycle. We're at the recovery phase, and historically, that economic cycle typically lasts, 7 years on average. So there is still more room for the equity rally to continue, we think.
Well, but haven't valuations got slightly ahead of themselves here, Janet? Or do you think that we're going to see profits keep up with the price increases?
Yeah, there's no doubt that valuation has turned more elevated after the rally in 2020. But we think that corporate earnings should be able to keep up more this year. Basically, if you look across the various sectors, corporate earnings growth expectations are mostly in the double digits. So I think that could be a momentum pushing markets forward. And I think that there is still very supportive monetary and fiscal policy. I doubt that many governments will be withdrawing any of the fiscal policy anytime soon, at least not in the first half of the year, because we're still struggling with COVID. And I don't think that policy makers in the central bank would also start to withdraw their monetary support. So we have a very supportive liquidity environment and the realization of economic activity and better corporate profit this year. So I think generally speaking, it's still a good environment. I'm not saying that there won't be any volatility, because evaluations are elevated, and I think occasionally we'll get potentially concerning news on the COVID or the vaccine or some other market concern. But we still think the general direction is up from here.
We're looking at, here's a great chart of global stock valuations, and you can just see this chart goes back to the end of the financial crisis in 2010. They're up, and away. At the same time, Janet, if I pulled up a chart of, which I'm sure Hillary has, central bank balance sheets, they just go up, and away. If I pulled up a chart of, debt to GDP, country balance sheets, they just go up, and away. I mean, how long is this sustainable?
Well, first of all, I think you're absolutely right. I think the central bank balance sheet has a very strong supportive, it is a strong supportive driver for the asset class. We saw many plots of the chart of, plotting the central bank balance sheet against the S&P 500, and they have a very positive correlation, right? So I think that as long as interest rates remain at zero, again, that's the argument of there's no alternative. As long as interest rates are going to stuck at zero or negative, which we think is going to be the base case for many economies for the next couple of years, then we think that this can continue. And if the central banks, if they keep on having this strong liquidity, then I think it can continue. I know that there are concerns that the Fed will gradually taper its quantitative easing, so that has been a bit unnerving. But I think they will do that very, very gradually. And also they will have very good guidance in guiding the market. So we don't think that would be a factor to be worried about, at least for this year.
Here you see that central bank balance sheets. This is as a percentage of GDP. So, of course, the Bank of Japan is almost off the chart at the top. But even if you look in absolute numbers, they're just pretty incredible. The interesting thing to throw into that conversation, I think, Janet, is inflation expectations, because you point out we need central banks to keep being accommodative. That's the debate the Fed is having. And you need them to keep rates at zero. Now, I guess the rates piece is pretty easy for them to do, but can they continue bond purchases at the same pace if we start, for example, in the U.S., getting inflation above 2%?
Yeah, that is definitely a great debate. I think more and more people are starting to worry about inflation. I mean, we think that inflation will ultimately rise from here, but it's a matter of how much inflation concern is there, because the Fed has already said that they have an asymmetric inflation target. They can allow inflation to run higher than 2%. So it's a matter of how much that is going to be above that 2%. And I think cyclically, we think there are few factors that could boost inflation, like the highest fiscal spending. People have more cash in the bank. They're going to spend. There's a lot of pent-up demand. And we think that energy prices are going up because of that year-on-year comparison. But I think, structurally speaking, there are also a number of factors limiting that surge in inflation. For example, technology, aging population, globalization, etc. So we think that inflation would rise, but it's not to the extent where central banks have to, curtail their asset purchases very sharply. I think that would shock investors. I think what they would do is a very gradual wind down, but not anything that will be shocking or like a big concern to markets.
All right, Janet, thanks very much for joining us. Janet Mui there, Bruin Dolphin Investment Director. Pleasure having you on this morning. Up next, the U.S. House passes a resolution calling on VP Mike Pence to invoke the 25th Amendment and remove Donald Trump from office. He won't do it, so they will impeach. This is Bloomberg. Welcome back to the European Open. We are 12 minutes into the session and looking at a pretty mixed picture here with not a lot of size in any of the directions that we're moving. The FTSE gaining 0.1%. The CAC is almost there, but the DAX and the IBEX are showing red arrows near unchanged. UniCredit has approached Europe's top available bankers for its CEO role. This according to the FT, which reports that the board has sounded out names including Andrea Orcel, Tidjane Thiam, and Martin Blessing. Joining us now to discuss is Bloomberg's European finance editor, Ross Larson. So, Ross, do we know who's in the lead here? Do we know what the responses have been?
Well, as far as who's in the lead, the FT reported that one of the candidates was Thiam from Credit Suisse, but says he hasn't engaged with actually having a discussion, did say that Diego Di Giorgi, the former co-head of Bank of America's investment bank, has actually begun talking with the bank, so that may make it a more likely candidate. Also, Martin Blessing, the former Commerzbank CEO and also ex-UBS, has apparently been talking with the bank. So those are the two that they said have actually engaged in some sort of discussion.
So they don't want any kind of internal, do they not have any internal candidates at UniCredit?
Actually, when you mentioned it, that hasn't come up at all. And all the names that we've seen since the beginning of this process, we've seen Italian company heads as well and international bankers, but there hasn't been any strong names advanced within the bank, as a matter of fact. That doesn't mean it's impossible, but that hasn't come up.
Got it. Ross, thanks so much for joining us. Ross Larson there, Bloomberg's European finance editor, talking about UniCredit's CEO search. Now, the House has just passed a resolution calling on Vice President Mike Pence in the U.S. to remove Donald Trump from office. Pence, of course, has already said he won't invoke that article. Meanwhile, Senate Majority Leader Mitch McConnell has told associates he's pleased Democrats are moving to impeach Trump, as he believes the president has committed impeachable offenses. This, according to the New York Times. Joining us now is Bloomberg's Bruce Einhorn. So, Bruce, it does seem fairly significant that senior Republicans, possibly including Mitch McConnell, are now ready to vote for, well, in McConnell's case, to convict on the impeachment that is really already a foregone conclusion, right?
Yeah, this is a big change from last year. So recall in early 2020, we had the impeachment of President Trump the first time, and no Republicans in the House supported that. One lonely Republican in the Senate, Mitch Romney, voted to convict. This time, we know at least a handful of Republicans in the House have said that they will support impeachment, including, significantly, Liz Cheney, the number 3 in the House leadership and daughter of former Vice President Dick Cheney. And as you said, Mitch McConnell has indicated that he thinks the president has committed impeachable offenses. So that seems to indicate that there might be some other senators who agree, who would be voting to convict when the trial takes place.
Right. Well, not really surprised about Liz Cheney. She wasn't exactly best friends with President Trump, and her dad reportedly behind that defense secretary's letter that came out in the WAPO a couple weeks ago. Let me ask you about the historic aspect of this. I mean, there's never been a president impeached twice, right?
No, this would be a real achievement. This is a first, yes. And the Americans have never had a president actually removed from office by impeachments. This would, if what seems to be the case, that there is some opposition from or support for impeachment among the Republicans in the Senate, then that does increase the chances that this may really be a first, that there may actually be a conviction. We're still a long way off from that, to be clear. It does seem, though, that they're closer to it than we thought.
I suppose we've never had a U.S. president incite an angry mob that he knew to be potentially violent to attack our own capital. So a lot of firsts here for President Trump. Bruce Einhorn, thanks so much for joining us to report a little bit on this continuing controversy. Coming up, Just Eat takeaway orders jumped 57% in the fourth quarter. No surprise there, but we'll talk to the CEO next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 20 minutes into the session right now and looking at kind of a mixed picture, floating a little bit higher. European markets, the CAC Quartal now trading up almost 0.25%. That may have a lot to do with Carrefour, one of the big movers in today's session, and of course it does trade in Paris. Couche-Tard is in talks to buy the French supermarket chain. As a result, Carrefour shares are up 9%. Telefonica, also a big mover today. The Spanish incumbent telecom, American Tower, is buying Telefonica's masks for $9.4 billion. Frankly, I'm a little bit surprised that Telefonica still owned those masks. This is a move that European incumbents typically made like 20 years ago. Takeaway Just Eat is one. We're going to talk to the CEO in just a moment. That's moving a little bit lower now. Could be kind of a buy the rumor, sell the news trade, because orders jumped 57% in the fourth quarter. But that's something that you may have expected had you been following along with civilization. Joining us now is the CEO and founder of Just Eat Takeaway, Jitse Groen. Jitse, thanks so much for coming on the program. Let me ask, first of all, what kind of growth you're expecting or what you're seeing in the first quarter. You know, we're locked down here in Germany and have been for months. I just saw a headline cross the Bloomberg terminal yesterday that Angela Merkel, the chancellor, may extend that lockdown for another 10 weeks.
Yeah, well, we are dealing with a perfect storm, actually, at Just Eat Takeaway. We have always historically grown rather fast. There's the pandemic, of course, but there has also been the merger with Just Eat last year, and a rather significant investment program into the legacy Just Eat markets. So all of that comes together at our business, and that results in that tremendous growth. And we've seen an acceleration since the pandemic started in the second quarter. We've also still seen an acceleration in the third quarter when, of course, there was a relaxation of measures. We've seen a further acceleration then in Q4, and we are still seeing very significant growth into the first quarter of this year. So it is certainly pandemic related, but that's not the only thing going on at our company.
What do you think about the vaccine rollout? What kind of effect is that going to have on your growth? I'm sure you're just as happy as everybody else to see the world, safer and more protected. But of course, as more people are vaccinated, more people are going to be going out to eat or joining friends at other people's homes.
That would be fantastic. And I say this as a human being, of course. No, I think what's important to understand is that most of our business is a marketplace business. It's not a logistical business. We also have a very significant logistical business, whether that is in Germany, in the UK, or in other countries. But that's not the lion's share of our orders. Our biggest chunk of the orders are marketplace orders. Those are convenience orders. Those are people that order pizza and Chinese. Now, I assume you don't eat pizza and Chinese every day, and this is also why the order frequency is, let's say, slightly above 10 times a year for our millions or our tens of millions of customers. Those orders will not be affected by the end of the pandemic. Those orders are dependent on the amount of customers that we have. And the amount of customers that we have accelerated the addition of those during the pandemic and during also these periods of lockdowns. What will be affected is the logistical business that we have, but that's also our fastest growing business. And it is a business that will not be as profitable as the marketplace business. So actually, for our company, I don't expect a decrease of our orders at the end of the pandemic. I do expect a deceleration of the growth, that's obviously something that all the logistical players will see. But as said, we are not as prone to an influence from the pandemic as I believe the competition is.
I tell you, I would, if my wife would allow it, Jitse, I would eat pizza and Chinese literally every single night. Let me finally ask you why you're so confident that you can take on big players. You've got DoorDash out there, you've got Uber in the US, through your acquisition of Grubhub. What gives you that confidence?
Well, look, I'm a founder of a business. I've been around for 20 years in this business. We've been always told that we could not defeat larger players, whether that was in Holland, in Germany, in the UK, and I'm sure people will say that about the US as well. Well, you know, we have a track record. We are a very large. You said that you were in that you are in Germany. We're a very large player in Germany. We are a very large player in the UK. Our British website is the largest food delivery website in Europe. The second largest food delivery website in Europe is our German business. We are a very significant player. We are top 3 of the world. We're in a good spot, and we're very excited about the growth opportunities that we have. And you know, we can only speak for ourselves, of course, but you know, we are in a fantastic, very strong position. I believe the company has never been stronger than today.
It's a pleasure talking to you. Hope we can get you back on the program very soon. Jitse Groen there, Just Eat Takeaway founder and CEO. Up next, European private equity firm Vitruvian Partners has agreed to invest 100 million euros in asset management platform Carnegie Group. We'll get more details from the Carnegie Group CEO, John Donahue. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day, and we're looking at equity indexes that aren't moving a whole heck of a lot, though I guess Well, no, I was going to say the trend is higher, but now we've come back down again. So basically unchanged here on the Stocks Europe 600, the broader European benchmark index. We've been up a little, down a little, but we've pretty much stayed in a very tight range this morning, looking for a catalyst to push us in one direction or the other. Let's get the Bloomberg First Word News right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Axios says Senate Majority Leader Mitch McConnell is leaning toward voting to convict President Trump. The New York Times says the Republican leader is pleased by the impeachment process, believing it will make it easier to purge Trump from the GOP. Others are warming to the idea as well, including the number 3 Republican in the House, who is planning to vote for impeachment. The rioters who stormed the U.S. Capitol last week are facing charges of sedition and conspiracy. Prosecutors have more than 170 suspects under scrutiny, and law enforcement officers are treating it like a counter-terrorism investigation. So far, more than 70 people have been charged with crimes ranging from trespass to assault. President-elect Joe Biden is likely to pick Wall Street critic Gary Gensler to lead the SEC. He ran the Commodity Futures Trading Commission during the Obama presidency, putting him in frequent contact and conflict with banks. He was a driving force behind the government's new oversight of the massive over-the-counter swaps market. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there with your First Word News. Now, European private equity firm Vitruvian Partners has agreed to invest 100 million euros in asset management platform Carn. Vitruvian will get a minority stake in Carn, which will use the proceeds to expand its technology offerings. Already the biggest of the third-party asset management firms. We have the CEO and founder with us right now, John Donahue. John, thanks so much for coming on the show. Let me ask you, first of all, what you're going to do with this money. I mean, what kind of expansion do you see?
Good morning, Matt, and delighted to be on your show. So Carn was founded in 2004, and as you said, we're a digital platform to the global asset management industry. And basically what we help asset managers and institutional investors do is speed up their product time to market, reduce their costs, and ensure better governance and transparency across their business and funds. And the jewel in our crown is called our core technology. And today we have 2 trillion of assets that rely on this technology. And it means that asset managers can easily view data, meet their regulatory obligations, automate their risk, and reduce administration, which is a great result for both investors and asset managers. So basically, the money is going to go in to expand the product offering on the platform. So more client-led product solutions, tackling some of the greatest challenge that our industry has, and hence our clients have, and automating a lot of reduced duplication across the industry. Better governance and more automation. So that's basically what we'll be doing. We'll be hiring a lot more product people, data scientists, software engineers, business analysts, to work deeper and deeper into our clients and provide them with more and more solutions. And so a lot of our clients, as we develop this technology and offering these solutions to our clients, they've been asking us to do more and more work for them around the compliance side, around the investment risk side, all data-driven, all technology-driven. And basically, this has been our client-led. And in fact, we actually involved some of our big clients in the whole process, from very, very early on, saying, look, what do you think we should do? Should we continue to grow organically, or should we be thinking bigger, bigger solutions for our clients and more ambitious for both our clients and the whole industry? And so John, a number of them have been.
What's your goal then? I mean, I know you have I think almost 300 employees. You're in at least 8 countries, and you work with asset managers that have over $1 trillion under management. where do you see Carn then in terms of, you know, those three, let's say, statistics in the next few years?
So Matt, look, you know, we're focused very much on our clients and what our clients what our clients want is industry platforms, you know, that they can focus very much on what's important to them. So it's around performance, you know, for the end investors. You know, it's around, you know, looking after their clients, and it's about gathering more assets, you know, so they can scale up their business and you know, tackle the greatest challenges. So to be honest with you, we're not focused on, you know, whether we have 2 trillion on core today and whether it's 10 trillion in the future. We're just focused on the clients, and we believe, look, if you're client led and you look at, you know, we've looked at other industries and what's happened there in terms of, you know, modernizing industries. You know, I think back, you know, when I joined this industry, you know, 30 years ago, you know, the whole buzzword was, look, data warehousing and, you know, golden source of data. And large institutions tried to tackle those, and most of them failed, unfortunately. And you know, we've come back and we said, look, it's all very basic. You know, our industry is terribly fragmented. You know, it uses different providers like distributors and asset managers, and it's deconsolidation. And what the industry needs is a platform that gathers the most important data, makes it available to their clients, gives them deep insights. And through that, look, we have no doubt the better job we do for our clients, the more we'll grow. But we're going to do it in a very, you know, we do everything in a real thoughtful way. You know, Vitruvian are a great partner. You know, they're long-term investors. They keep telling us, you know, take your time, do it properly, and it will be a great success. And we're delighted to have Vitruvian because, you know, they're one of the biggest tech investors in the world, tech-enabled services, and they're behind, you know, great names like Skyscanner and Just Eat. So they're bringing not just the money. What really attracted us to them was their intellectual know-how. How do you build industry platforms that are client-led, client-focused, and very much better outcomes? So what we want, our vision is all about, look, better investor outcomes, you know, through talent, technology, and the trust we build with our client base, which are the biggest institutions in the world, and they're crying out for, look, help to help them modernize, to digitalize, but also tackle big, massive data. And the better data you have, the better insights and the better results for the end investors. And that's what we're focused on. We're not focused on any numbers.
All right, John. Well, it's been a pleasure having you on the phone with us today out of Dublin, and I appreciate it. We wish you luck. John Donahoe there, Carn Group CEO, talking about the Vitruvian investment in his business. Up next, a tale of 2 UKs. The coronavirus outbreak has exacerbated inequality within the British population. We'll discuss the fallout from the pandemic with the Institute for Fiscal Studies next. This is Bloomberg.
these challenges, I believe strongly, have to be talked about as investments. They're not just nice things to do or socially nice things to do. They're investments.
If you want the field of economics to be growing and to be taking on new challenges and innovating and using new methods and interested in new questions, you need to have diversity in it, or else it's going to become a stagnant field.
We need to fund it in a way that is not so dependent on locational choice. So if we choose to locate where our houses are segmented by income and by race, then our education is similarly going to be different by race and by income.
Enshrining the priority of education in our legal system is a way of sustaining change over the course of many, many years.
I think the Fed can do a lot, but the private sector has got to be mobilized.
Fed officials, they're reiterating calls for more diversity and closing the racial gap in education in the U.S. Let's stick with that theme now. The generational divide that opened up in the UK after the financial crisis has been made worse by the pandemic and will be exacerbated if the Bank of England loosens monetary policy further. That's according to a report published by the Institute for Fiscal Studies. Joining us now is Xiaowei Xu, Institute for Fiscal Studies senior research economist. Xiaowei, thanks for joining us this morning. I think it's fascinating that this is something we've been talking about for a decade. Quantitative easing has exacerbated inequality. We know that from the first go-round after the financial crisis, and yet central banks continue to do it. Is that because they feel they have really no other choice, that the alternative is even worse?
Well, I think so far monetary policy has played a large role in providing stimulus as opposed to fiscal policy. I think the consensus within economics is now shifting with lots of institutions like the IMF and the OECD calling for a bigger role for fiscal policy. But I think fundamentally, what we saw over the 2008 crisis was monetary policy exacerbating wealth inequalities, QE and low interest rates favoring those who already had assets. But fiscal policy, instead of counteracting that drive towards inequality, further reinforcing those inequalities. So the period of austerity, again, hitting the low income more than the high income.
So what should the Bank of England and other central banks be doing in order to fix that problem?
I think the key thing is not what the central banks should be doing, but what government should be doing in terms of fiscal policy. We know that the central bank has already been talking about negative interest rates. There's very little leeway for monetary policy to push the stimulus further, and we really need to look towards fiscal policy. So things like benefit reform, for example.
A wealth tax, redistribution tax is something that's been talked about a lot, not only in Europe, but in the U.S. as well. How do you think that would work, and would you be worried about unintended consequences?
Yeah, I think the first thing to say is that at the moment, I think that the focus really should be on stimulus rather than on raising revenues through things like a wealth tax. Further down the line, in terms of raising revenue to cover the cost of the pandemic, I think a wealth tax is important, not just for addressing wealth inequalities, but also for thinking about intergenerational inequalities. So as you said, the pandemic has really hit the young very hard. So we've got this virus that disproportionately affects the old in terms of the health consequences, but it's the young who really suffered from the economic consequences and who've also really suffered from the mental health consequences of lockdown. So it's important as we try to raise revenue that we don't just increase income tax, which again falls on the young as they go through their working lives, and instead look at things like a wealth tax. In terms of wealth taxes, I think the devil's in the details. So it's important, I think, to distinguish between different types of wealth tax, some with better merits than others. So, for example, I think there's a big distinction between having an annual wealth tax that's just then embedded into our tax system and having a large one-off wealth tax just for the pandemic. And I think the former is not advisable, whereas the latter is quite an interesting idea.
We're showing a graphic now that COVID-19 is more likely to kill Britons in the poorest neighborhoods. This is something, sadly, that we're all pretty aware of by this point. But what do you think the negative synergies maybe are when you have something like this pandemic at the same time as Brexit and a weaker union?
Yeah, I mean, I think it's absolutely not ideal because, again, Brexit is likely to hit some of the same groups as the pandemic. I think the graphic you're showing on deaths by income decile, I think there's a lot of things that come into that, including, pre-existing health conditions of people on lower incomes, differences in occupation. So I think the pandemic has really brought together how these different types of inequality fit together.
Yeah, it's an unfortunate situation. I think it is being fortunately talked about more and more, and institutions like yours are providing us with facts to back the concerns that we all have. Xiaowei Xu, thanks so much for joining us from the Institute for Fiscal Studies. She is a senior research economist there. Hopefully we can get you on again as we progress further into this, looking and working towards a solution. Up next, Nasdaq or Russell 2000. Which index is going to win out in 2021? Is it the big mega cap growth stocks, or is it the small caps that have rallied so well so far? We'll put that question to MLive's Laura Cooper next. This is Bloomberg.
There's no disputing the fact that growth stocks have outperformed value stocks. On the other hand, I think there's no disputing the fact that what are called growth stocks have a better future than what are called value stocks. These are companies that have gotten better and better, that improve as they get larger and get stronger as they get larger.
There you hear from Oaktree Capital co-founder Howard Marks in his exclusive interview with Eric Schatzker. Highly recommend you go and check that out on Bloomberg.com. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist, to talk a little bit more about this. And in fact, your question of the day on the blog is related to the discussion that Eric and Howard were having in terms of growth stocks. The giant ones, right, have powered, Laura, the rally in the Nasdaq, which has been incredible to watch, but maybe even more incredible has been the rally in small cap stocks, the Russell 2000. Your question is, which will win in 2021? What are you hearing?
Well, certainly, I think, we have seen small caps just have this relentless rally. They're up about 35% since November. And even year to date, they're up about 8%, whereas the Nasdaq is really just treading sideways. Now, I certainly think this reflation trade has legs in order to support small cap outperformance through this year. But ultimately, I think Howard Marks does clearly have a point in the sense that, growth stocks have been kind of underpinned by this low rate environment that is allowing for these kind of elevated prices, just given the fact that kind of the cash values are kind of being inflated. So I certainly don't think we're going to see kind of any kind of significant shift away from kind of those tech stocks. But certainly if we see rising rate environment and a steeper yield curve, that does tend to point to the small cap outperformance this year.
I want to ask Laura about Bitcoin because I find it fascinating that last week in the run-up to $42,000, even the most skeptical of bears was telling us, Eddie Vanderwalt coming on here saying, all right, I'm a convert. And this week, as it drops down, this huge drop to 35,000, everybody kind of piles on and pounds it. Even, I won't say who it is, but someone you work with, he's a viewer, he's a fan favorite on this program. Last week was telling me, I'm not a Bitcoin bear, I'm just a semi-skeptic. And this week, he called Bitcoin a glorified Ponzi scheme. What's the deal with this?
Well, it's certainly been amusing as a kind of a macro watcher watching from the sidelines. But arguably, Bitcoin is incredibly divisive. We have the one camp who see it as quite a kind of a speculative bubble, akin to a Ponzi scheme, whereas we have the other hand, which is kind of it's a clear kind of alternative to dollar debasement fears, to rising inflation. But ultimately, at the end of the day, I think, what my colleague is kind of referring to is the fact that, Bitcoin, yes, it could go to 400,000, could go to, 1 million, who knows? There's no fundamental backing really behind it that will keep that equilibrium steady state at a high level. But ultimately, Bitcoin, they're converting to cash because that allows them to go out and actually purchase things. So I think really at this point, we don't have kind of the fundamental backing to support kind of this ongoing rally. But at the same time, I think over time, we are seeing this potential uptrend because it is gaining a broader investment base, both through retail and institutional investors. So we're going to see these exceptional bouts of volatility, but probably not one to take sides at this point.
I like to remind people, that I lived on Bitcoin for 2 weeks in 2012. I bought gas, beer, and video games, which is pretty much all I need with Bitcoin. And also that, when I was reporting on it then, no one could believe it was going to break $1,000. Someone had bought a pizza with 10,000 Bitcoin, which today would be worth $360 million. So, it's been an incredible journey with Bitcoin. It's been an incredible journey with the dollar as well. People fight about there's no intrinsic value to Bitcoin. What's the intrinsic value to the U.S. dollar or any fiat currency? It could continue heading down. Certainly if the Fed stays accommodative and keeps boosting its balance sheet, 7, 8, 10, 20, 30, 40 trillion dollars. What do you see in terms of the greenback?
Oh, absolutely. And I think that's why we've seen the dollar weakness that we have, is just the fact that we are seeing kind of these rising fiscal deficits that are aggravating the potential twin deficit challenge that could potentially see kind of investors shift away from the dollar. And then against this backdrop of falling real yields. Now, up until the past week or so, that has been kind of the consensus trade. But what we're seeing is that yields are starting to climb higher. We are seeing potential, growth outperformance in the U.S. And as well, the dollar positioning has been quite stretched to the downside. So we are seeing some covering of that. So I think really the growth needle is going to kind of swing for the dollar, but it's probably ambiguous to say at this point the near-term direction.
Laura, got to cut you off. Laura Cooper, thanks very much.
A historic week in Washington. The House passes a resolution demanding that President Trump's cabinet remove him from office. Mike Pence won't agree. Representatives hold a second impeachment vote today. Taper talk. Two Fed officials push back on discussing a withdrawal of support so soon. Investors await guidance in the coming days. And the search is on. UniCredit has approached Tidjane Thiam and Andrea Orcel as candidates for chief executive at the Italian bank. That's according to the FT. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, a lot going on, certainly a lot going on the political front, but also a lot going on when it comes to banking, banks, and, of course, negative interest rates. Now, remember, we are hearing from a number of central bank governors in Europe in the coming days. For the moment, dollar is actually fluctuating. If you look at Treasury yields, they're sliding. The dollar holding on to losses after two Federal Reserve officials push back on the possibility of tapering bond purchases anytime soon. And then I believe in the last couple of minutes, we also have a headline from Russia, and this is from the Bank of Russia, the Central Bank of Russia. No, actually, it's from the Russian Finance Ministry. I stand corrected. They say they will resume FX purchases in January. If we go back to the markets, it's very clear that, whatever we're hearing in terms of what investors are trying to grapple with is the implication of rising treasury yields and the spread between the rate on the 2- and 10-year note rising sharply this year. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The rioters who stormed the U.S. Capitol last week are facing charges of sedition and conspiracy. Prosecutors have more than 170 suspects under scrutiny, and law enforcement officers are treating it like a counter-terrorism investigation. So far, more than 70 people have been charged with crimes ranging from trespass to assault. Now, the UK government is urgently calling on the public to follow the lockdown rules. A continuing surge in infections has pushed the number of patients on ventilators to the highest level since April. Home Secretary Priti Patel says the police will crack down on those putting the health of the nation at risk. Now, Italy's government is on the brink of collapse. A junior ally of Prime Minister Giuseppe Conte has renewed its threat to abandon the ruling coalition. Italy Alive, led by ex-Prime Minister Matteo Renzi, is only at 3% in opinion polls, but if it pulls out, the government would lose its parliamentary majority. And President-elect Joe Biden is likely to pick Wall Street critic Garrett Gensler to lead the SEC. He ran the Commodity Futures Trading Commission during the Obama presidency, putting him in frequent contact and conflict with banks. He was a driving force behind the government's new oversight of the massive over-the-counter swaps market. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. After a historic day on Capitol Hill, the House will now vote today whether to impeach President Trump for a second time. Now, the vote comes a week after a mob of the president's supporters stormed the congressional building. Late yesterday, the House voted to demand that Vice President Mike Pence use the 25th Amendment to remove the president from office. That vote was largely symbolic. Now, the vice president had already said he won't comply. Joining us now for more is our senior writer, Stephanie Baker. Stephanie, there seems to be a turnaround on the Republican side with that story from the New York Times yesterday saying that Mitch McConnell, according to people familiar with his thinking, would, I'm choosing my words very carefully because they didn't go as far as saying that he would support impeachment, but certainly he wasn't against it because then he would be a diminishing force in the Republican Party.
Yeah, that's right. It does seem that Senate Majority Leader Mitch McConnell has changed his mind. The tide is turning. That report in the New York Times was confirmed by Fox News, who reported that McConnell will not stand in the way of impeachment and is, quote unquote, done with Trump. What that means in practice is unclear at this point. After the House votes later today to impeach Donald Trump, the other issue is how many House Republicans will join in that impeachment vote. It looks like there are at least 5, possibly more than a dozen that will support the impeachment, the articles of impeachment. And then the unclear thing now is when does it move to the Senate? It's unlikely that a Senate trial could happen until January 20th. And how will that play out? How many Republicans in the Senate will support that move to impeach and convict Donald Trump after he has left office? And I think legal scholars are split on whether or not they can proceed to do that. And of course, the political momentum changes, the political calculation changes. It becomes almost more of a censure and a way to prevent Trump from running for federal office again. And that may be part of Mitch McConnell's calculation that he does not want Trump to have a grip on the Republican Party going forward.
But it's unclear to me, Stephanie, would Mitch McConnell actually vote for impeachment, and who has the power to recall the Senate before January 20th?
Well, he has the power to recall the Senate before January 20th because the Republicans remain in control until then. So, and he has indicated that, at least previously, that he would not recall the Senate for such a trial. Now, whether or not the thinking is shifting on that is unclear. You're right. It's unclear how many Republicans would vote to back that after the 20th, after they then lose control of the Senate. It's uncharted territory now, I think it's in, some Republicans may be calculating it's in their interest to vote for impeachment long term so that Trump does not have this sway over the Republican Party and be able to sort of position himself for a run in 2024, raising funds and, perhaps, deciding who might, stand up primary challenges against certain Republican candidates in 2022 even.
So, Stephanie, why is Mike Pence so categorically, not wanting to use the 25th Amendment?
He said that he doesn't think it's in the national interest. I think there's perhaps a feeling that it's unclear whether or not this is the real intended use of the 25th Amendment. It may be that he does not want to further anger Trump supporters. He said he thinks it would be divisive. But given everything that happened on Wednesday and that rioters were storming the Capitol saying, "Where's Mike Pence?" and some of them were even saying, "Hang Mike Pence," it's extraordinary that he is being so cautious about his position towards Trump and the 25th Amendment and has, said very little on impeachment. And likewise, this, reporting on Mitch McConnell, this is not Mitch McConnell coming out publicly and saying these things. This is whispers behind the scenes and being confirmed, off the record. When he comes out and says something publicly on this, it's when perhaps the tide will really turn and other Republicans will feel like they have political cover to come out and support impeachment. The House vote today, remember in 2019 when they impeached Trump, there were no Republicans that voted in support of it. You now have prominent Republicans saying they will, including the House number 3, Liz Cheney, saying that she would vote to impeach Trump, and that may encourage others, give political cover to other Republicans to do the same.
Stephanie, thank you so much. Our senior writer, of course, covering the White House, Stephanie Baker. Now, coming up, much more on a historic week in Washington. We'll have not only on what Mitch McConnell will do next, but we'll have more on security surrounding Inauguration Day. This is Bloomberg.
it is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UniCredit is narrowing its search for a new CEO. The Financial Times is reporting it's approached two of Europe's top available bankers, Andrea Orcel and Tidjane Thiam. The paper reports the bank's board will likely make its decision within the next 4 weeks. It faces a tight timetable after CEO Jean-Pierre Mistier resigned last month. Now, Bitcoin has resumed its declines as the digital coin heads for its worst week since March. It's casting doubt on predictions of a maturing and less volatile market. Bitcoin hit a record of almost $32,000 on January the 8th. Since then, it's mostly slumped, hitting a low of around 30,000. And Canadian convenience store giant Couche-Tard is exploring buying French grocer Carrefour. It would be a major shift in strategy for the firm, which is focused on smaller stores and gas stations. The deal would help it expand its presence here in Europe. Carrefour operates almost 2,800 supermarkets and 700 hypermarkets. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's get back to the markets. And joining us is Patrick Armstrong, Chief Investment Officer of Plurimi Wealth. Patrick, a million things going on with treasuries and, of course, the spread between the 2 and the 10-year. But how should the markets actually look at what's happening in Washington and Capitol Hill and with the Republicans?
With what's happening on Capitol Hill, I don't know if that matters so much to treasuries. I think the market's looking through it. What's happening in politics matters a lot to treasuries, with what's happening with the Democratic control of the Senate and the more fiscal spending that'll likely allow. And I think that's been pushing up treasury yields, is leading to the steepening of the 210s as well. I don't think will happen this year, but the Fed's shown that it's not even thinking about raising interest rates, but they are thinking about tapering.
But are they looking at, the political mayhem in the U.S.? How difficult is it? And I know the market is looking at other things, but how difficult is it to actually take a completely neutral view of what's happening in U.S. politics?
Well, I think the Fed would be reacting to what was happening in politics if the market reacted, if the Fed had to give confidence that the markets were still there, providing liquidity, that the Fed was the backstop if needed. But because the markets are ignoring it, I think the Fed's role is, in the short term, in periods of crisis, is to look at markets and make sure there's no crisis of confidence. And there's definitely no worry about that. So I actually don't think this is that material to the Fed at this point, surprisingly.
So when you look at, some of the concerns over the Treasury yield, is it the level or the pace of getting there?
Probably both. I think the Fed has shown it's reactive to equity markets from September 2018 when they pivoted from hiking to basically ending the hikes because the equity markets sell off. They've shown they are very reactionary to markets. And I don't think they have a firm level in mind that they'll let the 10-year get to. I think they'll see how equity markets respond, how credit markets respond. And when there's signs of stress there, I do think that prompts the Fed to probably say, we're thinking about extending purchases, talking about yield curve control if they need to. They don't want to upset markets. So I don't think they have a fixed level in mind. But as soon as there is a market impact, I think that basically prompts their discussion and basically focuses their thinking.
Patrick, does it change dollar trajectory?
A higher yield potentially could be dollar positive. The thing with a higher yield is it's probably with the backdrop of a strong rebound in the economy is how you get higher yields, basically, that there is growth, there is a reflationary backdrop. And with the U.S. being the largest consumer in the world, consumption is the driver of the U.S. economy. When consumption goes up, your current account deficit blows out in America. So I think you'll have offsetting forces there. And a reflationary backdrop is dollar negative because it's probably funded with fiscal stimulus and a widening of the current account deficit. So I think that would actually trump the interest rate margin that you'd get on a treasury.
So given all of that, Patrick, has the Fed become the most interesting central bank for 2021?
I don't think many other central banks have decisions they can make. I think most central banks are going to be driven by what the Fed does. Any loosening from the Fed will probably have to be matched by other central banks. The other central banks aren't even in a position where they're probably considering tapering or lessening the purchases they're making. So I do think the Fed's probably the one that may have a decision to make by Q4 to start thinking about things anyway. But 2021, I don't think there's going to be much in the way of any action from central banks. They'll be reactive to markets. If things don't go as well on the recovery as we expect, I actually think there'll be more dovish moves rather than potentially the hawkish tapering that people were talking about a couple of days ago.
Patrick, this is our MLive question, and it goes to equities actually, not treasuries, but the Nasdaq or Russell 200, which index will win in 2021?
It's an interesting question. Russell's run so far so quickly. Actually, I'll put my money on the Nasdaq for 2021 just because the Russell's off to such a flying start. And I think the big cap tech still represent reasonable value at this point. I think a lot of the smaller tech companies without the cash flow and earnings yet, I think those multiples probably have gone too far. But it's the big cap tech that drive the Nasdaq.
Thank you so much. Patrick Armstrong, there, Plurimi Wealth Chief Investment Officer, stays with us. So we'll have plenty more on the markets. So we'll also talk about banking with Patrick next. Coming up, UniCredit's next chief executive, the Italian bank, considers former UBS and Credit Suisse executives to head the lender. More on that next, and this is Bloomberg. This is Bloomberg Surveillance and Francine Lacqua here in London. Now we have, of course, a lot going on. Christine Lagarde speaking at an event saying that the December projections are still very clearly plausible. I'm sure she's either being asked about some of the difference of projection because of the virus or the vaccine rollout rather, and the fact that many parts of Europe have to extend their lockdown measures. Now, onto banks and UniCredit narrowing its search for a new chief executive. The Financial Times is reporting its approach to two of Europe's top available bankers, Andrea Orcel and Tidjane Thiam. Now, the paper reports that the bank's board will likely make its decision within the next 4 weeks. It faces a tight timetable after Chief Executive Jean-Pierre Mustier resigned last month. I think he's actually stepping down in April. Let's get back to Patrick Armstrong of Plurimi Wealth to talk about central banks, but also the banking sector. Patrick, thank you for joining us or staying with us. First of all, maybe let's go back to what Christine Lagarde was saying. Given the lockdowns, given the concerns with the vaccine rollout, do the projections really stand?
I think the ECB's, from memory, it was forecasting 4.2% economic growth for 2021. So coming into the year, we actually thought there was an upside risk to that. And I think that what's happened with the virus, Germany likely extending lockdowns, sure, there were all of Germany really, or all of Europe facing various lockdowns for the first few months of this year, is probably more strict than we expected. So I actually think that 4.2, I think it's still fair to say it's plausible at this point. A strong second half rebound, pent-up demand, and basically the government's spending the fiscal power to make sure that spending power is maintained for large portions of the population that are suffering the income drawbacks from the lockdowns.
Patrick, how invested are you in Europe? If you look at even the recovery fund in Italy, now there could be a government crisis yet again at a key time for vaccinations. Is Europe still investable?
We own a lot of Europe. Within equities, we're significantly overweight European equities. It's a function of it being cheaper than the rest of the world. It's a function that everywhere is going to grow with the vaccines that have shown they have a high level of efficacy. Europe is going to see a sharp rebound from a sharper drawdown in terms of economic growth. So we think Europe has that favoring it. The banks are not something we own widely. We own UBS on the equity side of things, is our only European bank we own, but we do have a significant exposure in cocoa bonds. It's one area we started adding to in the spring when they were yielding 6 and 7%. Today they yield a little over 4%, which is still a very big carry versus negative interest rates from the ECB. Tier 1 capital ratios are at an all-time high as we speak. So I think they do have a very strong capital buffer. I don't think there's a huge amount of upside in the equities. You'll be buying the bank equities to get the dividends when they're reinstated, and I prefer to get the bond where that income is more stable.
Patrick, do you have a view on what type of banker should run UniCredit of Italy?
I don't. That's a question you're just throwing on me that I haven't thought about right now, so I'm not going to give a good answer, so I'll pass on that one.
Okay, talk to me a little bit about consolidation. Sorry. I feel like we talk about this, and we've been talking about it for the last 3 to 4 years, and I remember a conversation with actually the UniCredit chief executive about a year ago saying there will be consolidation when share prices go up. Do they need to go down or up?
To really buy something as a CEO of a bank, you have to feel like you're missing out by not growing and acquiring and buying assets that are cheap. And I don't think the animal spirits are there in the boards of these banks, that they really feel that if they make this acquisition, it'll be a game changer, it'll put them on a growth path. And the mergers that are being contemplated have been mergers of weakness, that basically boards realize their business is falling apart at times almost. So Commerzbank and Deutsche Bank have talked about it. UBS and Credit Suisse have talked about it, things like that. They've not really been focusing on this is going to be a game changer and it's going to be a merger that's going to really strengthen our position. So I think a strong economy, potentially a steeper yield curve, if that ever happens in Europe, would be the catalyst for those kind of things.
Patrick, thanks so much. Patrick Armstrong there, Plurimi Wealth Chief Investment Officer. Now, coming up, ETF IQ Europe. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacroix, and over the next 30 minutes will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Best month on record, European ETFs taken 21 billion euros, bringing total inflows for the year close to the 100 billion mark. We ask if investors can keep up the pace in 2021. Demanding diversity, State Street becomes the latest money manager to vow to use its voting power to make company boards more representative. And making the switch, a technology hedge fund has turned itself into an ETF. We'll ask if the start of something big. Well, first up, let's get a look at which countries and sectors have been attracting the money. Our Danny Berger has all of the details. Hi, Danny.
Hi, Francine. Well, we saw net outflows from European tracking ETFs, 73 million to be exact. But leading the inflows this week was Germany with over $200 million worth of inflows. Most of that, if not all of that, was going to a climate change ETF in Germany. So not necessarily just German tracking, but rather a very specific ESG strategy. Now, we continue to see inflows into the UK. They've ebbed a bit, but we have seen some heavy inflows after the transition period ended starting in the new year. Now, when it comes to outflows, Switzerland and Italy are two of the big ones, both about $150 million flowing out. Italy, of course, has some political drama. Perhaps that's driving some of those flows there, Francine.
Danny, another volatile week for Bitcoin. What do the flows look like?
So the flows there actually were a pretty good indicator of things to come. You'll recall last week on the 7th, we had a record high in Bitcoin. At the same time, this Switzerland-based Bitcoin ETN saw its biggest outflow on record, and the outflows have continued in the day since. So this was probably a good one to track. If you wanted to get a sense of sentiment, perhaps it was a bit foreshadowing, and it could have been the same folks sending the price of Bitcoin lower as well. Of course, a few days after that record outflow, we also heard a warning from the FCA for people who are invested in Bitcoin products, Francine.
Thank you so much. Our Danny Berger there with the very latest funds and flows. Now, joining us is Peter Thompson. He's Goldman Sachs Asset Management Head of European ETFs. Peter, there's certainly no shortage of news since 2021 started. How has that played out in ETFs?
I think, Francine, is just a continuation of a very busy cycle last year, given everything that's taking place. So whether it's thematics, whether it's ESG, whether it's actively managed ETFs, it's just a continuation of growth in the market and, multiple themes driving that growth.
I mean, what's the theme of 2021? If you look at ESG, and I know we'll come back to it later, how much does that have to do with actually what we're seeing in treasuries and how much that's driving the ETF markets?
Yeah, I think here in Europe, Francine, it is ESG. It is now front and center. I think we hit an inflection point last year where, this just matters, in a very meaningful way with investors. And so, those of us that are managing money and putting funds in the market are reacting to that and talking about it every single day. It's a really big deal.
Peter, is there a way of looking at COVID, through ETFs that you can't do in just buying general stocks?
I think, specifically into COVID, it's tough, Francine. I mean, you could look obviously into the healthcare sector, and there's, plenty of ETFs that look in that area. So once again, you kind of go towards a sector or a theme. But I think it's not so much COVID. It's the forward, right, on how that's going to impact the market. And so far as we've seen in the markets, they're resilient and they're strong, and inflows in the fourth quarter, particularly into the equity markets and ETFs, were very healthy.
Peter, I know we started actually last year talking about how much this ETF space can grow in Europe compared to the US, given where we are, given some of the investing out there, but also some of the actively managed ETFs. What's 2021 going to bring? I think, another year of strong growth. So, the global market added over $500 billion in assets. So we're at about $5.5 trillion. Europe was about 20% of that, Francine, over $100 billion again. So, we expect that to continue and to grow, from that base. I think Europe is still developing. Fixed income is still developing in Europe, another great year in the fixed income ETF markets. So, a continuation with just, kind of an overlay of ESG on almost everything, I think. Peter, what's the one thing, apart from ESG, that you think will really dominate the European ETF market?
Yeah, I think we're going to have, a big year for what the market, describes as thematics. And you can look at, AI or clean energy or, the future of healthcare, lots of just fascinating themes in there that are beginning to change. And I think people are starting to get a handle on what I describe as the forward, Francine, kind of where these trends are going. And I think you're going to see a lot more money, millennials, moving into those kind of themes in 2021.
Thank you so much. Peter Thompson there of Goldman Sachs Asset Management stays with us. Now, coming up, a technology hedge fund has transformed into an ETF, opening itself to a wider market. Could 2021 be the year of more opportunities for small investors? We'll discuss that next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows, and I'm Francine Lacqua. Now, a small hedge fund specializing in tech investments has just made ETF history. It's become the first in the world to convert itself into an exchange-traded fund. Now, the asset management industry had been watching out for a mutual fund to make the switch, but instead, the hedge fund Upholdings Group got there first. Let's get more with our Ksenia Gluchko, who heads up our EMEA equities team. Ksenia, why did Upholdings decide to convert their hedge fund into an ETF?
Hi, Francine. So Upholdings Funds, which was running a tiny $3 million hedge fund, wanted to expand their investor base, and in particular to include retail investors. So they began exploring the process of converting their hedge fund into an ETF last March before formally making a filing with the SEC in October. Their actively managed Upholdings Compound Kings ETF began trading at the very end of last year. The founder and CEO, Robert Cantwell, explained their logic by saying that investors shouldn't have to be rich and invest privately to beat the market. So their move to convert the hedge fund into an ETF was about expanding access to high-quality growth investing to non-professional investors.
Ksenia, are we likely to see more conversions into ETFs going forward?
I think that's highly probable, Francine. This is part of a bigger trend where we're seeing ETFs continue to take away market share and look more attractive than mutual funds and hedge funds. The main reasons are the ETF's ease of access and their cheapness, and that's really appealing to retail investors who are increasingly playing a more important role in the U.S. stock market. In contrast, mutual funds, for example, have been losing assets on a net basis for 6 years in a row now, and more hedge funds are closing than opening these days, and their fees remain under pressure. So now with the Upholdings Compound Kings ETF, we have the first conversion of a hedge fund into an ETF, and the market is now waiting for the first mutual fund conversion, which issuers including Guinness Atkinson Funds and Dimensional Fund Advisors have filed plans for.
All right, Ksenia, thanks so much. Ksenia Gluchko there, who heads up our EMEA equities team. Now let's get back to Peter Thompson of Goldman Sachs Asset Management. Peter, what's the read across to your world?
Yeah, I think this is another kind of legitimization of the wrapper, Francine, in terms of what it can do and how adaptable it is. And I think you've got a lot of organizations out there, asset managers, hedge funds, alternative managers that are thinking about their client bases and in particular kind of the future client base, the millennials, the younger folks. How are they going to want to consume investment content and investments? And I think a lot of that is looking at the ETF market. And so, the hedge funds, the mutual funds that are looking at the conversion of some large funds, the names you mentioned, in particular, Dimensional. I think a lot of folks are out there looking at that and thinking, how do we have to tailor our fund range for future demand, not just today's demand, but the demand that's coming in a digital, mobile world. And I think this is another indication of that trend becoming real.
Peter, talk to me a little bit about the regulation trends in Europe. I know in the US there's huge tax incentives to own ETFs. How do you expect regulation to change in Europe?
Yeah, I think, obviously we don't have the tax angle here that they have in the US that provides that further incentive. But you've seen the regulators reaching out in terms of, looking, for example, Francine, at non-transparent active, wanting to have and publicly stating, wanting to have discussions with the asset management industry about how they think and look at actively managed ETFs or non-transparent active ETFs. So I think this is this is firmly on the regulators' radar, and we're going to have more of those conversations. We're going to see more of those resulting in new products coming to market. I'd say as soon as this year.
Peter, do you know, is it difficult actually to see how much bigger the market will become in the next 12 and then 18 months?
Well, I would think, with 2 years running now of over 100 billion in growth in Europe, Francine, I don't think many would estimate that that's going to go down. And I think once again, we're kind of, I hope, coming into a sweet spot here. Most in the industry would say in Europe, we're 5 to 10 years behind the US. And you think of that kind of hockey stick graph, we've clearly passed that inflection point, and it's now, how fast does the slope of that line increase? But I think most of us are betting that that this year will be a bigger year than last.
And Peter, how much does the ETF fixed income space actually grow?
Yeah, I think it had a big year last year in 2019, Francine, the first time we had greater inflows in fixed income than in equity ETFs. This year, we were on track to do that again until an equity rally, in November and December. So equities finished a bit higher. But I think you're going to continue to see a lot of growth in the fixed income market. That's something at GSAM, very big part of our business that we're very much focused on. Some other big players in that space, and I think more room in that space for development. With a history less of indexing and indexation, and I think the active side will be very prominent in fixed income.
Peter, thanks so much. Peter Thompson there of Goldman Sachs Asset Management stays with us. Now, coming up, one of the world's biggest ETF operators is stepping up pressure on companies to do more to improve diversity. We'll discuss that next, plus your smart beta scorecard. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
These challenges, I believe strongly, have to be talked about as investments. They're not just nice things to do or socially nice things to do. They're investments.
If you want the feel of economics to be growing and to be taking on new challenges and innovating and using new methods and interested in new questions, you need to have diversity in it, or else it's going to become a stagnant field.
We need to fund it in a way that is not so dependent on locational choice. So if we choose to locate where our houses are segmented by income and by race, then our education is similarly going to be different by race and by income.
Enshrining the priority of education in our legal system is a way of sustaining change over the course of many, many years.
I think the Fed can do a lot, but the private sector has got to be mobilized.
Fed officials are reiterating the calls for more diversity. Now let's stay with the subject and one of the world's biggest ETF operators stepping up pressure on companies to do more to improve diversity. Well, State Street Global Advisors says it will vote against corporate directors in the US and the UK who don't disclose the racial and ethnic makeup of their boards. The money manager also warns from next year it will vote against boards that don't have at least one director from an underrepresented community. Let's get back to Peter Thompson of Goldman Sachs Asset Management. Peter, are we going to see more asset managers do the same?
I think so, Francine. I mean, this is just an absolute sign of the times. That board diversity is becoming so prominent. It's something here at Goldman. Our CEO David Solomon last year at Davos made an announcement about promoting board diversity in our IPO and banking process. So we're on the record on this one, and I think many other voices will join that call. It's just becoming more and more important. And we're listening to our clients, and they're telling us that this is something that's important to them. So I think you're just seeing the beginnings of quite a wave coming.
How does that will it be enough to actually have a sizable change?
Well, I think it's just raising the profile of the topic, Francine, and as it filters its way into the dialogues with the investors, institutional or retail, and then through to the products and the investment process, it's going to drive this change, right? And it's going to be demanded, I think, increasingly. And here in Europe, especially in the ETF market, I think we're leading in this space. You're seeing so much activity in ESG, in the different categories, and this is just a manifestation of that. I think just a brilliant wave and move that's taking place, and we're right in the middle of it.
Peter, how do you make sure that you play diversity through ETFs? Is it under ESG or should it have its own category?
I think you really have to ask, because you're seeing that ESG, SRI, sustainability kind of label across both ETFs and other kinds of funds. Investors need to drill down into that, Francine, and get answers in terms of the E, the S, the G, right? Is board diversity a component of how your money managers are thinking about this? They have to ask those questions. There's a lot of information out there, and all of us are ramping up in terms of the resources and the people we have involved in ESG. So there's so much more information out there, but I really encourage people ask the questions, right? Put your money managers on the spot and see what they're doing in this space.
Peter, thanks so much. More from Peter in a minute. But now let's take a look at the smart beta strategies, which have been gaining ground this week. Here's our Danny Berger with this week's smart beta scorecard. Hi, Danny.
Hi, Francine. Smart beta ETFs that are listed in Europe had a massive week, and that was really all dominated by flows into value ETFs. So we have to remember the week we're looking at is from January 5th to January 11th. So that captures this period when you had in the U.S. the Georgia election flipping the Senate to blue. So here is where we get that reflation trade played through ETFs. And that, of course, benefits some of these more higher beta types of factors, not just value, but size as well. That means smart beta ETFs saw their flow more than triple, led by those two strategies. Dividend comes in a distant third, bringing in $83 million worth of flows. Now, on the flip side, we actually didn't see any outflows this week, at least net outflows. We did see some strategies that were just flat on the week. For example, ESG was flat on the week. That, of course, doesn't really speak to the strategy's popularity because it's just 1 week. 1 week does not a trend make, and that has seen record inflows in 2020, so perhaps just a slight pause. One interesting thing to note with smart beta ETFs right now is that according to Bernstein Research, factor correlations are at the highest in at least 2 decades. That scares a lot of folks, makes things like multi-factor strategies not work as well. But for the moment, value still garnering a lot of interest, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest on the scorecard. Now let's get final thoughts from our guest this morning, Peter Thompson of Goldman Sachs Asset Management. Peter, if you were to look at some things and actually look at the state of the market, it could be treasuries, it could be also piling up into Bitcoin and what it tells us about the state of what investors are looking at. Are we missing anything?
I don't think so. You're seeing some pretty significant volatility, right? Danny mentioned in the factor space, obviously in the Bitcoin space, with this last week or two. So volatility's out there. I think that's here to stay. We're in that kind of macro environment, Francine. But I think with ETFs in particular, you've got the ways to invest in these themes, to take views in these themes, efficiently. And I'd come back to that point of when you think about, the kind of new investors and the millennials and others, how they're going to access the market, the ways they want to do it and the structures they want to use. ETFs are just very prominent in that space. So I think we're going to continue to see this movement of funds and kind of be, ETFs being kind of a lead indicator of where market sentiment is and where we see, volatility increasing and decreasing.
How do you look at liquidity, Peter?
I think, once again, 2021 was a great year in terms of kind of proving that case again, particularly in the spring, particularly in the fixed income markets where we had such great stress in the credit markets. But ETFs came through, with flying colors in terms of liquidity, accessing the market and being kind of a point of price discovery, Francine, for a lot of the less liquid parts of the market, particularly credit. So I think we're in a good spot there. And, and it is, it's made people more confident in the way the market operates.
Is there anything that you would look at a stress point? So you feel more confident about the way the market operates, but if there were a stress point, where would you see it first?
I think maybe in the credit space, right? But that's more kind of translating, liquidity into, bid offer and then, the supply and the underlying trading of the securities. But, that's worked before and been tested. I think in ETF space, what people are looking at now is this, the active part of that. And how does that work? How transparent is that? Does that translate into liquidity, Francine? So far so good with it, but it's a new part of the market, that we're all working on. And I think, this will be a year where we got to get a lot more information on that, around liquidity, trading volumes, et cetera, and what some of these big names are going to do, with active strategies.
Peter, when you look at volatility, is there, that there will be probably not each asset class is created equal. So where do you see the most volatility?
Well, I still think maybe, some of the themes, we mentioned some of the factors have been volatile, with the evolving political situations, around the world, Francine. I think, we're going to see, I would imagine we'll see more of that on the equity side, and through ETFs, maybe in the next 3 to 6 months here. But, in these kind of, macro conditions, it's really hard to tell.
Thank you so much for joining us. Peter Thompson there, Goldman Sachs Asset Management, Head of European ETFs. Now, that's it for this week's Bloomberg ETF IQ Europe. We'll be back next week.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Historic week in Washington. The House passes a resolution demanding that President Trump's cabinet removes him from office. Mike Pence won't agree. Representatives hold a second impeachment vote today. Taper talk. Two Fed officials push back on discussing a withdrawal of support so soon. Investors await guidance in the coming days. And the search is on. UniCredit has approached Tidjane Thiam and Andrea Orcel as candidates for chief executive at the Italian bank. That's according to the FT. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lackman, London, Tom Keene in New York. Tom, I have to say once again, it's all about U.S. politics. We're trying to figure out really district by district, state by state, what the thinking is, whether impeachment can go through, and then really that bombshell from the New York Times about Mitch McConnell's thinking.
Yeah, there's no question the impeachment process today, Francine, will go through. That's just a given. But what's so interesting, moving to, say, 5 p.m. this evening, is the then what? And I would suggest for our international audience, the then what is really, really important. If I could say one thing, Francine, to open surveillance for me this morning, and that is the statement by the military yesterday in the history of this nation was absolutely original. What the Joint Chiefs of Staff wrote in a two-page memorandum to 2 million people was extraordinary.
But, Tom, we're literally doing the maths, right, to just try and figure out if there are enough Republicans in the Senate to impeach the president. And actually, Mitch McConnell is the only person I believe that can recall the Senate. He hasn't done so yet. Is there any chance that he would do it?
I don't know about that. We'll talk to our experts about that. But that gap there, Francine, in the Senate versus the Democratic House is about 17 votes. That's a lot of votes.
Yeah, it's a lot of votes. Let's get straight now to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the House has voted to demand that Vice President Mike Pence use the 25th Amendment to remove President Trump from office. The vote was largely a symbolic act. That's because hours earlier, Pence told House Speaker Nancy Pelosi he wouldn't comply. All this sets a stage for a vote today to impeach the president a second time. It comes a week after a pro-Trump mob stormed the Capitol. The number 3 Republican in the House will vote to impeach the president. Liz Cheney of Wyoming says President Trump, quote, summoned this mob, assembled the mob, and lit the flame of this attack. The daughter of former Vice President Dick Cheney has been a target of internal Republican criticism from Trump allies. And Bloomberg's learned that President-elect Biden will probably name Wall Street critic Gary Gensler to head the Securities and Exchange Commission. Gensler ran the Commodities Futures Trading Commission during the Obama administration. The role put him in frequent combat with banks. And the Trump administration is set to unveil last-minute changes to Fannie Mae and Freddie Mac. They would allow the mortgage giants to retain significantly more capital, but many of the thorniest issues on releasing the companies from federal control would be left to the Biden administration. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Let me look at the data right now. I really was going to do one screen today. I did two because Francine's angry if I don't do two data screens. Futures up 6, Dow futures up 36. It is one churn in the market is the way I'd put it, with some dollar stability. Yields come in a little bit off the festivities of the last 2 days. Francine, I'm struggling here. Okay, Bitcoin. Let me start the coverage, our team coverage on Bitcoin. It's lower, 34,561. I have no idea where Bitcoin's going to be when we impeach today, Francine.
I don't think anyone knows where Bitcoin it is, so I'm very happy we're talking a little bit about
Your
Bitcoin.
Bitcoin
European
report.
stocks, Tom, are climbing. The euro is edging lower after European Central Bank said it will keep an easy monetary stance for as long as needed. We were hearing from Christine Lagarde just moments ago. And then I would just say that, some of the equity markets are supported by M&A news. The French grocer Carrefour rallying some 10% after a Canadian company is exploring a transaction. So there's a bit of M&A news. I would point, as you did, Tom, to the 2 10-year spread in the U.S. that seems quite significant since the beginning of the year. Now, the House will vote today whether to impeach President Trump for a second vote. The vote comes a week after a mob of the president's supporters stormed the congressional building in Washington. Now, he responded yesterday at Joint Base Andrews.
If you read my speech, and many people have done it, and I've seen it both in the papers and in the media, on television, it's been analyzed, and people thought that what I said was totally appropriate.
Well, joining us now is Bloomberg's editor-at-large. He's actually in charge of all of our coverage. He is Marty Schenker. Marty, when you look, first of all, at Mitch McConnell, so he holds the power to decide what happens to the presidents. There was that New York Times blog yesterday saying that, they spoke to people that know his thinking, and he would be happy with impeachment. What does it actually mean? Would he vote for impeachment?
That is actually the fundamental question when you say that he controls what happens in the Senate. On this one, he may take a role of not advocating one way or the other for senators to actually vote their conscience. But what he himself does and what he says is critical for giving cover to those moderate Republicans and those on the in the middle ground who are afraid to vote for conviction of President Trump. So McConnell is the key, but what he says and what he does could be two different things.
So, Marty, how do we see that? For example, if he really was for impeachment, would he recall the Senate?
Well, that is actually something that Chuck Schumer, who is the presumptive Senate Majority Leader, is contemplating. If it really does depend on just how fervent McConnell is. They could call back the Senate early. They're scheduled to come back on the 19th, the day before inauguration. He could bring them back sooner if they have the votes to convict President Trump and essentially expel him from office.
Marty, good morning on an historic day. What I find absolutely remarkable, Marty, is the 5 Republican candidates. The geography of this nation, from Syracuse, New York, out to Upton, Scion of Whirlpool at Benton Harbor, way out to the 3rd District of Washington State, just north of Portland. The common feature of these 5 Republicans is they actually have real elections. They're close elections. Everybody's competing every minute of every day. Describe that centrist Republican thought now versus the certitude that we see from the Trump supporters.
Well, it's really interesting, Tom, how this is different from the first impeachment cycle. There are moderate Republicans who are in battleground districts who actually feel that voting their conscience and explaining it to their voters will not jeopardize their election, that the Trump base has lost some of its momentum. And, in 2 years, we're going to find out whether this vote of conscience is actually beneficial to their candidacy.
My book of the summer a number of years ago, Garrett Graff, The Threat Matrix on the FBI. And I'll be honest, Vice President Cheney doesn't look very good in Garrett Graff's book. And the battle over Iraq and Iran and the debris of September 11. Explain to our audience the symbolism of his daughter providing leadership last night.
Well, Liz Cheney is the number 3 Republican in the House of Representatives.
But it's more than that. This is about Wyoming, and it's about the fabric of Western republicanism.
Yeah, and I actually think the more significant thing is not that she came out and said she will vote for impeachment, but her statement, which she viscerally condemned the president and laid what happened at the Capitol on Wednesday right at his feet was pretty compelling. And it does give cover to Republicans who are on the fence in the House to join her in voting for impeachment. And I think there will be a significant number of Republicans in the House who are going to do just that today.
Marty, I think for impeachment to go through in the Senate, you need 17 Republican senators to vote for it.
Yep.
When do we know if we'll get that figure?
Yeah, as Tom said, that's quite a lot of senators. And, you know, sitting here today, you would say that that is a complete long shot, whether you can possibly get 17. And there's no way of knowing until they actually move the articles to the Senate. And even then, senators may not say anything about what their intentions are. But one thing is clear, there will be more senators voting for conviction should that reach the Senate than there were the first time around.
Beneath the fold yesterday, folks, in all the different digital newspapers, including Bloomberg, there was a story that came out on what we call the Joint Chiefs of Staff. These people have a lot of brass on their chest, and they're the senior Pentagon officials. A one-page memorandum to 2 million troops, as it was stated. He's the commander-in-chief. Would you explain why that document has to be issued?
Well, actually, there was a statement issued by the Joint Chiefs yesterday that was relatively unprecedented, which they said that the peaceful transfer of power is a tenet of the United States democracy, and they stand behind it, and so should every single person in the military. And it was essentially unprompted, but issued by the Joint Chiefs. It's an interesting historical document in that they are basically saying, let's get on with it, let's get the peaceful transition underway. And you don't see the military doing that in elections.
Never seen it. I think it is truly unprecedented. Martin Schenker, thank you so much on an eventful day here as we begin a day of impeachment. Futures up 5, Dow futures up 32 as well. We will digress in a wonderful way. We'll have perspective in this hour from Lord Patton on Hong Kong and, of course, Christopher Patton on Taiwan. Please stay with us from New York and London. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
and Treasury actions, and specifically the reduction of the Fed funds rate to zero, has had a very coercive effect on the market. It has required people to invest because they don't want to sit around with cash, money market fund, bank deposits, all earning zero. They don't want treasuries at less than 1 or high-grade bonds at 2. And so they've had to push out into risk assets.
Howard Marks there, Oaktree Capital Group co-chair and co-founder, speaking exclusively to Bloomberg's Eric Schatzker. Now joining us to talk about the markets and, of course, the economy ahead is Peter Shafrick, RBC Capital Markets global macro strategist. Peter, as always, thank you so much for coming on, especially on such a momentous day when you look at Treasury and we look at the spread between the 2 and 10-year U.S. yield. What happens in the U.S. from now until year-end?
Well, I mean, look, one of the things that we have said repeatedly, and my colleague Tom, who speaks to you very frequently, has said repeatedly, is that once we get through this very dark hour currently as far as the crisis is concerned, the upside for the economy is quite considerable. And it's quite considerable on many fronts. So one of them would be, for instance, the labor market, but another one would also be the inflation picture, which is probably going to increase from here onwards. So therefore, we think that the overall direction of Treasury yields, for instance, is upwards. That doesn't mean it's going to be a smooth line, and probably in the here and now we see a bit of a pushback. But overall, we do think that higher Treasury yields are likely over the course of the year.
Peter, 2 Fed officials actually pushed back against the possibility of tapering bond purchases anytime soon. Is that your base case scenario?
Well, I mean, we have to see with the tapering, because tapering can obviously mean quite a few things. It can mean just reduction. It can mean sort of maybe pushing the envelope a bit lower. It could mean stopping them altogether. So, but that debate itself is almost certainly towards the back end of this year is going to become a live debate. I'm fairly certain about that. And if I may say, if you take a step back, one of the things that you can see in this early sell-off that we've seen this year is the composition of that sell-off is very remarkable, because it was by and large driven by higher inflation expectation, break-evens, and the real yield component has stayed almost glued to the bottom end of the range, particularly in the shorter maturities. And in my mind, that is one of the things that the Fed and the other central banks around the globe will keep a very close eye on. As long as the sell-off that we're seeing in the Treasury market is driven by high inflation expectations, I think they're much more relaxed than if it is driven by higher real yields.
Peter, good morning. I'd like to know the ambiguity to the global corporate landscape of higher interest rates. Are higher interest rates good for multinationals or not?
Well, I mean, it's a double-edged sword. There's no doubt about it. In principle, obviously, what every corporate around the world would like is a booming economy and super low interest rates. So that's clear, particularly given that they have quite a high debt load. But I think if you balance the two against each other, if you say, well, higher bond yields come about because the underlying rates environment requires high yields because the economy is doing so well, I think they'll probably appreciate that. What they wouldn't appreciate if you have an environment where their bond yields, particularly their bond yields, go up because the spreads are blowing out for reasons that are not good and the economy is not doing well. So, but given that we have a relatively good outlook for the economy, I think they can live with higher interest rates.
Well, this is a really important observation, Peter. I mean, if you get them up and, who knows what interest rates are going to do, folks. I'm not predicting that. But the idea of an explosive move in equities as corporations adjust, do you just assume that's what's going to happen? Corporations will adjust to whatever they're dealt and up we go?
Well, as always, it's not only the direction of travel, but also the speed. I mean, you just used the word explosive. I mean, if we have an explosive change in underlying financial fundamentals, a collapse in the equity market or rising bond spreads, that's a very, very tricky thing to deal with. If you have a gradual adjustment, if you have sort of a recovering economy that typically does well with the equity market and probably also sees higher bond yields, I think that's something, if it's gradual enough, you can deal with that.
But Peter, we heard from the ECB actually that they're still quite comfortable with their projections, given that lockdowns seem to be extended in Europe, given vaccinations and of course distribution is problematic in certain countries. Do we need to revise downwards our expectations not only for the world but especially for Europe?
Yeah, I mean, when I read the comments, I was thinking to myself, maybe she would regret that. But so I think it is quite plausible that particularly as you pointed out, as the lockdowns are, I think, quite likely to extend all the way into March or towards the end of March, that the projections will have to be lowered once again. But also here, I think in Europe, the dynamic is probably the same as I was just describing for the US, that once you come out of the winter month, and the upside is there. Now, obviously, the base is low, and therefore the year as a whole is not going to look as rosy as it was. Well, it never really looked rosy, but not as good as it was in the previous projections. But it's still the trajectory in that case that I think would trump sort of the lower base in Q1. But I think the projections will have to be lowered.
Peter, if you look at central banks around the world, who has the toughest job? And we also have a possible government crisis in Italy looming. You know, is it the Fed or is it ECB?
Well, I think it's very hard to sort of compare between the two because none of them has an easy job. But obviously, I think the complexities in Europe, particularly for the ECB, they outpace the complexities for some of the others. I mean, if you just take that, you haven't raised it, but one of the debates that we discuss quite often with clients is about the issue of yield curve control, for instance, and whether or not that is feasible in Europe. I personally don't think so, just because of the complexities and what kind of yield would you target. So I do think that the ECB has a very tough hand that it has to deal with.
Thank you so much. Peter Schaffrick there, RBC Capital Markets Global Macro Strategist. Now, coming up, we speak with Richard Edelman, Edelman Chief Executive. I think they have a survey or two about chief executives, but we'll also talk about news, the media, and, of course, Capitol Hill. That's at 5:30 a.m. in New York, 10:30 a.m. in London, 10 minutes from now. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Canada's convenience store giant Couche-Tard says it's in talks with French grocer Carrefour. The owner of the Circle K chain says there's no guarantee the discussions will lead to a deal. Carrefour has a market value of more than $15 billion. An acquisition would be a major strategy shift. Couche-Tard has focused on convenience stores and gas stations, not supermarkets. American Tower will pay $9.4 billion to buy telecom towers in Europe and Latin America. The seller is Spain's Telefonica. American Tower had largely stayed away from Europe, where phone companies are trying to raise money from their infrastructure to cut debt and to pay out for 5G rollouts. And Visa has walked away from a proposed $5.3 billion takeover of fintech company Plaid. The deal was aimed at expanding the card network's services, but Visa faced a prolonged antitrust fight with the Justice Department. The government said Visa was buying Plaid to eliminate an emerging threat to its online debit business. And that is the Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, this is what the markets are looking at. Now, of course, they're looking at treasuries. They're looking at the spread between the U.S. 2 and 10-year. European stocks so climbing. The euro also edging lower after the European Central Bank. And actually, its president, Christine Lagarde, said it will keep an easy monetary stance for as long as needed. The other thing I'm looking at, Tom, is, of course, a bit of support in equities because of M&A news. A French grocer, Carrefour, rallying 10% after an offer from a Canadian supermarket. And then oil prices rising for a seventh day, Tom.
Yeah, and the Washington uncertainty, and yes, a nod to the pandemic with well over 4,000 people dying yesterday. I modeled out where the pandemic goes to get to 500,000 deaths in the United States. The frightening reality of early May for that. Yeah, there's a pandemic, but what there really is this dawning awareness of massive stimulus, and I think that's given the market the stability here, given all the uncertainty. One measurement of that stability in the yield space, 2-10 spread, one figure yesterday, 1 percentage point difference between the 10-year and the 2-year yield. It comes in a little bit flatter this morning, but don't want to make too big a deal about this. Francine and I are thrilled to bring you Lord Patton. We'll do that here coming up next. Christopher Patton on his Hong Kong, the responsibility of the Western financial system, also Patton on Taiwan. Please stay with us from London, New York, on this historic day for Washington and America. This is Bloomberg.
y ve cómo te tiran algún objeto, o cómo notas la sensación, ¿no? Como que te golpean a ti. O yo creo que hace que empatice mucho con los personajes y que sea todo mucho más real.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Now, Jim Baker, former Secretary of State, somebody I've gotten to know over the years, he was in my firm, he used to say the best job in the United States and the best job in Washington is Secretary of State. But it's a difficult job. Would you say it's the best job in Washington, or the best job you've ever had?
Oh, undoubtedly. It's the privilege of a lifetime, David. And it is a challenging job, but one that if you got a great team here at the State Department like I do, you can do wonderful things to protect America, to keep our nation safe.
So as you've now served about a little more than 2.5 years as Secretary of State, and you look back on what you've achieved, what would you say you're most proud of having achieved as Secretary of State?
Well, internally here, I think we've made some real progress at the State Department. We created an ethos for our team. We made sure we had the right people in the right places. We built out a planning system here that I think will have real value as the years go on here at the State Department. I don't talk about those things enough, but the leadership challenge of being the Secretary of State and building out what is a big organization and handing that off to the next Secretary of State is an important one. Around the world, we've taken on what President Trump calls America First. It's based on restraint and realism and respect for other nations and their sovereignty. We'll talk about specific places and regions, but it's a central understanding of American capacity to do good in the world, to do it without putting lots of people in harm's way, and to deliver on the things that matter.
So as you look back on your tenure as Secretary of State, what would you say has been the most frustrating thing for you? Is there something you wish you had achieved that you haven't yet achieved, or some other frustration you'd like to discuss?
Well, there's certainly lots of unfinished business in lots of places in the world. The work that we've done to change how America thinks about the Chinese Communist Party and how we respond to it is incredibly important work, but as a long-term project, something that America neglected for 5 decades. We turned the page. We put American foreign policy with respect to the Chinese Communist Party in a new direction, but there's still an awful lot of work to be done.
David Rubenstein with the Secretary of State. And of course, look for Mr. Rubenstein, the David Rubenstein Show, peer-to-peer conversations on Bloomberg Television at 9 p.m. Thursday. Looking forward to that. Right now, on our diplomacy and on the West diplomacy to Hong Kong, Christopher Patton joins us. Lord Patton is a former governor of Hong Kong and also a Coolidge Scholar from Oxford of a few years ago. Of course, coming over to America in his early years. Before we get to the topics at hand, Lord Patton, I must ask about the Marshall Scholar to Oxford of a few years ago, William Burns. Mr. Burns will be appointed head of CIA by President Biden. This is a return to a more traditional cabinet and officers of the government, isn't it?
Yes, it is. He's a very fine man. I mean, I worked with him a bit when I was the European Commissioner for External Relations and saw him when he was in Oxford, I guess a couple of years ago. I think he was spending a term at All Souls College, finishing his wonderful book on American foreign policy in today's world. And he was the sort of public servant who they probably wouldn't have had identical views, but was represented as well by people like James Baker, who you were just talking about, and George Shultz, who I worked with a bit. Fine public servants who never allowed a partisan view of the world to trump their belief in America's national interest and its international role. And I hope that we'll see that again with Mr. Biden's administration. So far, the appointments he's made, particularly in the field I know best of foreign policy and security, have been very, very good. Blake Sullivan, and so on.
Lord Patton, I was speaking with Stephen Engel in Hong Kong, and we wonder of the Western response to what we have seen in Hong Kong. And I want you to be acute here about what is your chosen path for the major American banks. Do they embrace the new Hong Kong, or should they dispute what China has done?
Well, it's a bit like asking whether you should embrace the mafia. They may feel they have to, up to a point, work within the context of what China has been doing in Hong Kong. But the national security law certainly isn't going to give them the autonomy in their commercial dealings, which you would expect a bank to want. If they're obliged to start closing people's accounts because they may have annoyed China, it's going to make a lot of their customers and their investors think twice about their relationship with the banks in question. So I think banks have a really difficult choice to make. I don't seek to give them lectures, but I think they should be very open about what they choose to do. And in some cases, I think they may well have to make a distinction between, that is an institutional distinction between what they do in China and Hong Kong and what they do outside. But we know from the way that Jack Ma has recently been apparently treated and Alibaba that the Chinese don't make a distinction between the private sector and state-owned enterprises, nor between state-owned enterprises and the private sector and the interests of the security apparatus in China. So these are difficult choices which they're being obliged to make because of the fact that this Chinese regime has taken a different turn to the one that Jim Baker and others we followed in the years at the beginning of the century.
So, Lord Patton, how do you see the crackdown on Alibaba and Ant? Are they seen as an existential threat by Beijing?
Yes, I think because they got, I suspect, in Beijing's eyes, in the eyes of Wang Qishan, who I think is the smarts in the administration, because I think they got too big for their boots. They had so much money invested, they became competitors to, I think, state banks in China, and were critical of the regulators. And I think this was regarded as, to borrow a phrase from political science, this was regarded as lèse-majesté by the Chinese regime, which doesn't want any criticism from anyone. So I suspect that Jack Ma is lucky he hasn't been locked up, unlike some others who criticized the Chinese government. But this is a very nasty government, a brutal government, a government which is taking advantage of the pandemic, which of course it's partly responsible for, and taking advantage of the chaos, alas, in Washington, and the self-criticism in a number of liberal democracies to run riot and behave loutishly internationally, and particularly in Hong Kong.
So what should the international community or governments actually do? Are there any further actions that would be helpful?
Yes, there are. It's not enough to conduct your diplomacy with China through a megaphone. And you have to distinguish, I think, between the Chinese Communist Party and the Chinese people. After all, it was Chinese people, Chinese doctors, who tried to blow the whistle on the coronavirus epidemic when it was starting and were silenced, shut up, dealt with by the police when they tried to do that. But in dealing with the Chinese Communist Party, I think President-elect Biden is correct in arguing, as apparently he and others around him have done, for trying to put together a partnership of liberal democracies, not to establish a Cold War and not to try to contain China, but to constrain China when it behaves badly.
Lord Patton, the idea is we used to show the flag in the harbor. Of course, you left with Prince Charles on a very difficult day a few years ago. Do we have the capability right now to show the flag, that imagery of the mountains in the background, the hills in the background, and the Western ships in the harbor? I think we have a technical difficulty. It was a speechless Lord Patton. No, it was not. He's never speechless and always informed, but it was a technical difficulty, and we'll leave it at that right now. Futures -7, Dow futures at -45. George Saravelis of Deutsche Bank just out with an important reaffirmation of pound sterling. Saravelis making clear he looks for stronger sterling off a proper vaccine response. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. It's a historic day on Capitol Hill. The House will vote today whether to impeach President Trump for a second time. The vote comes a week after a mob of the president's supporters stormed Capitol Hill. Late yesterday, the House voted to demand that Vice President Mike Pence use the 25th Amendment to remove the president from office. That vote was largely symbolic. The vice president had already said he wouldn't comply. President-elect Joe Biden will seek a deal with Republicans on another round of coronavirus relief. Bloomberg has learned that the approach could mean a smaller initial package that includes some priorities backed by Senate Republican leader Mitch McConnell. The goal is to avoid trying to ram through a bill without Republican support. And coronavirus deaths in the U.S. are likely to climb by at least another 80,000 in the next 4 weeks. That's according to a new forecast based on models from the CDC. The U.S. is expected to add more than 3,000 deaths a day, bringing the total to more than 459,000 by early February. In London, financiers are keeping the faith that they can win back access to the European Union in the next round of talks. Their industry was left out of the Brexit trade agreement, but in a poll by the consulting firm EY, 76% of bankers said they expect the EU to grant some form of equivalence decisions that would open the door to more market access. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. Now, up next on their annual trust report, we talk about media. We talk about U.S. politics with Richard Edelman, Chief Executive of Edelman. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Now, in the latest Edelman Trust Barometer, a majority of people believe that the media, government, and business leaders aim to mislead the public by spreading misinformation. Now, we're now joined by the Chief Executive of Edelman. He's Richard Edelman. Richard, always great to speak to you, but especially on a very tough week like this week where we saw the riots in Capitol Hill. What exactly did we see? Is this a misinformation? Why are people questioning the election?
This is the outcome of disinformation. And we have a shocking state of information bankruptcy. And the report is very clear. People don't believe the leaders anymore because they're being told lies, and they don't believe the media platforms either because they think that it's politicized or somehow unethical, divisive. And so, in fact, people are just getting facts from social media and acting on that basis. And that's really what happened on Capitol Hill the other day. They had false hopes, and they were deluded into thinking that there should be some sort of change on the basis of individual action. Completely disgusting.
But, Richard, how does the media gain back credibility? How does government gain back credibility? And if you look at, some of the social media giants actually barring President Trump, is it right that they decide who can speak and who doesn't?
To me, it's long overdue. But the reality is when someone foments violence, you can't have that up on social. I mean, it's Oliver Wendell Holmes' decision about crying fire in a crowded theater in the Supreme Court. It's just antisocial, actually. And so I actually believe that all of the media need to get away from opinion and towards fact. And we have to get better information in the hands of people. And I think here business has a very important role. In our study, we found actually that company newsletters or company information is the most credible source of information. And that's because trust has gone local, Francine, that my CEO, my company is the best source because I can see it, believe it, hear it. And therefore, it's a new responsibility for companies and CEOs in particular to stand up and speak up at this time.
This is the first moment, folks, after what I thought was going to be, I believe, 17 years at Davos, that I realized there will be no Davos. You begin Davos at that big white hotel with the leadership of Richard Edelman and the wonderful Lionel Barber telling you with the Financial Times where we are. Richard, wonderful to start my Davos this year with you. Where are we on the infodemic? I love the word, and I want to know what the vaccination is right now to get the people of this country so disaffected from Francine Lacroix and Tom Keene back on board. How do we take the vaccination?
So, Tom, the disinformation around vaccine is just shocking. And in fact, our study found that only a third of people are willing to get vaccinated immediately, another third after a year, and 1/3 won't do it at all. In France, it's half won't get vaccinated. And so what we have to do is business needs to take the ball right now.
Okay, thank you. When do we see that? How do we affect that with the new president? How does business take over as the operational mechanism, not only for the vaccine, Richard, but also this distrust in media?
So, again, media is the fundamental pillar of information in the world. And media is going to do its job better in the next phase because it's not going to be following tweets and being led by the nose. I'm convinced of that. But business also has a fundamental job here of taking forward vaccination. We have to persuade people through quality information. Who is in the clinical trials? Why are there side effects? If there are, what's the small number of people who will be affected? And we also have to be sure that we're telling people the success stories. Get the opinion leaders within companies actually to get vaccinated first in some way, that they can then say, look, I'm able to go back on the road, or I'm able to do my job better because I can go see clients and I'm safe. That's how we have to get work happening again in this world.
But Richard, what is media? I mean, it seems that media is every blogger, website publisher, in the world. So does there need to be a crackdown on what is actually considered media?
Look, we have a social media that has actually been the dominant part of the discussion because it's led mainstream. That's got to change. Original reporting starts with Bloomberg and the FT and quality media. And we need to have corroborated facts. And, facts matter. And facts need to be reported. They need to be checked. And they need to be third-party corroborated. And not just somebody's opinion or experience. That's not sufficient. You know, we found that information hygiene is terrible. Only 25% of our respondents say that they actually check their stories before they send them to friends. People are inherently interested in sort of self-promotion by sharing. That's an education program that we have to do to say, you know, we need to actually help each other to get better educated. Don't send around stuff that you just think is fun.
Richard, do you make a difference between what we're seeing with the anti-vaxxers movement and, you know, politics? It's also clear as a member of the media that it's difficult to get proper information on maybe less vaccines, but actually, you know, what COVID-19 is.
Look, the connection between disinformation and the pandemic is like a Rambo strain of DNA, and we have to break that apart. And, you know, we will deal with the pandemic through the vaccine if we can get people to believe government and to believe business. And business has a much better chance in a way than government because it's close to its employees. And we have a real chance every day to explain this is the consequence. This is how we actually can get back to work. This is good for you, and it's good for your families. And we need to keep hammering that message because the anti-vaxxers have made it popular to say, look, there's not enough evidence. The vaccine has been rushed. That's just not so. The vaccine has been miraculously discovered, but the trials have been very substantive and very broad in terms of population groups. And again, CEOs have a very important role here. You know, like 90% of people now say, I want CEOs to speak up about the pandemic and about job training and things like this. It's a totally new role for business to be a fundamental part of the information flow.
Richard, you and I have talked about this, and folks, I think you all know that I'm hugely biased. The Edelman Trust Barometer was truly one of the foundations of how I started Bloomberg on the economy a million years ago. Richard Edelman, what you're saying is we need more James Dimon. Dimon's conference call is different. Dimon writes a 58-page love note every year in his annual report. Dimon's up at Davos yelling and screaming. He's cornering me in the espresso bar, telling me about risk, blah, blah, blah. Why can't we get more Jamie Dimons out there in the CEO space? What are they afraid of?
Tom, I think that there's a sort of learned behavior from predecessors, which is keep your head down and the problem will pass. Well, it's not going to pass. At the moment, CEOs are the group that has the opportunity to change this game. And we need you all to actually lead now publicly, not just privately. And your ability in your community, your ability in your company to make change, especially about vaccination, is urgent.
Okay, but come on, they're all talking to you, Richard Edelman. Now they're all saints, and they're pulling away their political donations from people that supported the president. You know the story on the rigged election and all that. When do they call up Richard Edelman and tell us, how do we get our political donation machine back in order for 2024? I mean, how many months, weeks, or days is it till they just forget about that, it's old news, and they get right back on the political gravy train?
You know, Tom, I actually think that this is a crucible moment for CEOs. This is the test. And the initial reaction by some companies to suspend all political donations, to me, is not intelligent. We should say those who voted against the approval of the Electoral College vote really need to be scrutinized. To just say that we won't donate at all to politics, I think is fallacious and not sustainable. And we should encourage politicians who behave properly, actually. And so, but I also see CEOs having a fundamental role on systemic racism, on job training, on promotion for infrastructure spend. This is a time when business actually can bring the two parties back together. We have an urgent need for business to just get on with the job and to lead here. And it's clear from our data that business is much more trusted than government, and business is the leading force in institutional trust right now. It won't last forever necessarily, but again, this is the time.
Richard, thank you so much. Too short a time. We need to get you back on to see exactly who trusts Chief Executive, also given the widening wealth gap. Richard Edelman, there, Chief Executive of Edelman. Coming up later, we continue our focus on U.S. politics. This is Bloomberg.
What do you think you would like to do when your term as Secretary of State is completed?
David, I think I've answered all your questions. I may kick this one. I don't know precisely what I'll do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg Surveillance. Futures are flat. Kevin Cirilli in the next hour on your Washington, and Christopher Verone charts the markets. This is Bloomberg. Good morning.
Jean-Paul, how different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell, but I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
This morning, this time is different as the select Republicans, they join Democrats saying the president must go. Cheney of Wyoming, she says what we know now is enough. McConnell of Kentucky is reported to approve of the House action. The military, it will obey, quote, lawful orders from civilian leadership. The Joint Chiefs of Staff, they release an historic one-page memorandum. 2 million troops are reminded there will be a new commander-in-chief. And is 500,000 deaths a day possible in America? Think early May of this 2021. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York, Francine Lacroix in London, and good morning to all of our team in Washington, set for an historic day for the United States of America, and indeed all of those watching around the world. Francine, we need to stop the show right now and look at 43, 44, 4,500 deaths in America. My extrapolation of deaths, conservatively 500,000 by early May, and the immense realities of these rigid lockdowns across Europe and the United Kingdom. A lockdown update, please.
Well, Tom, in the UK, the numbers have been going up. I have to say, so we've been in a very strict lockdown where all primary school and I believe most of secondary schools are also closed within the UK. And the numbers finally are going down. So we did hear 2 days ago from the Prime Minister Boris Johnson that actually he could be even stricter, maybe mandating that everyone who's outside wears masks. But if you look at the numbers, and I was looking at them this morning, here in the UK, because of the lockdown, they're going down. Now, I would say, Tom, more than the numbers of infected and, of course, our hospitals overwhelmed, which is why we think of the people in the front line, is how do you vaccinate people quickly enough so that the virus, doesn't mutate? And, the challenge is really of distribution and whether this needs to be at a federal level or at a more minutiae kind of, neighborhood level, and how you distribute it, and you have to do it very fast.
What's your mental timeline? We just spoke to Richard Alderman, really our first interview of a non-Davos in this late January. Francine, what's your timeline? Merkel goes out X number of weeks and months. Italy goes out and the rest. Are you looking March? Are you looking April in Europe?
Well, a lot will depend, again, on the distribution campaign for these vaccines, Tom. And if you look at France, they're way behind the curve on how many people they've had vaccinated. I know there are targets for example, the UK and getting people above 70 vaccinated by February 15th. And this will depend. If they hit those targets, I think in the next 5-6 weeks, I'll give you an update on when I think, things will start looking up. I think it's too soon to say, given where we are right now.
And I would say
in America, same for the U.S.
Yeah, in America and the U.S., a whole different story. Good morning to all of you in Arizona, especially hard hit. With our first word news on Washington, here's Ritika Gupta.
Morning, Tom, Francine. Yes, the House has voted to demand that Vice President Mike Pence use the 25th Amendment to remove President Trump from office. Now, the vote was largely a symbolic act, and that's because hours earlier, Pence told House Speaker Nancy Pelosi he wouldn't comply. And all this sets the stage for a vote today to impeach the president a second time, and it comes a week after a pro-Trump mob stormed the Capitol. The number 3 Republican in the House will vote to impeach the president. Liz Cheney of Wyoming says President Trump, quote, summoned this mob, assembled the mob, and lit the flame of this attack. The daughter of former Vice President Dick Cheney has been a target of internal Republican criticism from Trump allies. Bloomberg's learned that President-elect Biden will probably name Wall Street critic Gary Gensler to head the Securities and Exchange Commission. Gensler ran the Commodities Futures Trading Commission during the Obama administration. The role put him in a frequent combat with the banks. And the Trump administration is set to unveil last-minute changes to Fannie Mae and Freddie Mac. They would allow the mortgage giants to retain significantly more capital, but many of the thorniest issues on releasing the companies from federal control would be left to the Biden administration. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. Quiet data check today. I almost only did one screen, but I did two to keep Francine happy on Bitcoin. Futures -3, red and green in the screen. Nasdaq tries to go green right now. The VIX settling in at the 23 handle, 23.46. I think, Francine, just to keep this short, the idea of Brent crude 56.63 still gets my attention. Again, Ed Moore's modeling out to $60 a barrel, and people sort of getting used to this higher end of this range.
Yeah, I like, Tom, the fact that you mentioned oil prices because they're actually rising for a 7th day. Now, I know the level is not huge, but actually, I think it's the longest streak since 2019. Now, overall, look, the dollar's strengthening, Tom. I know I'll keep also my data check short because we have to get to more important matters today, but European stocks are up a little bit. Again, if you look at futures, they're actually fluctuating. I think investors focusing on comments from the Federal Reserve, but also European central banks about the outlook for monetary stimulus. And then there's a big M&A news with Carrefour and Telefonica shares rallying in Europe on deal news. Of course, separate deals news, but two industries that could be part of more consolidation.
Very good. Right now on the equity markets, I mean, these guys grind out notes, I should say, every day, and we have our favorites. You have your favorites too, folks, as well. And it's always understood that the really great analysts and strategists every 5, every 10, maybe even only every 20 days, deliver a jewel. Christopher Verona Strategas stopped me yesterday with his research note on where we are in this market. Mr. Verone joins us now on the discretionary of the world. Chris Verone, what is a discretionary sector stock?
Discretionary sector stock is a consumer name that is more cyclical than many of its peers. And I think what's been remarkable about this discretionary sector is how for the first time in 4 or 5 years, the average stock is starting to take some share from the really big weights. This whole sector has been dominated by Amazon and Home Depot over the last number of years. That is starting to change here. We advocate, not just in discretionary, but for the broader market, owning the average issue over the really big weight.
Does that mean mid-cap?
It means mid-cap. It means recognizing that the concentration risk in this index, and I think that's one of the ironies of passive right now. Passive investing designed to spread risk out across the market is now remarkably concentrated. You look at discretionary, the 3 largest stocks comprise 55% of the sector. Same thing in tech, same thing in many other sectors. So I think when you approach this market in trying to mitigate risk, owning the average issue, not the big weights, is the way to do that here.
Chris, what looks frothing the market right now?
I think a few things we might want to be mindful of is suddenly the whole street has woken up to this idea of cyclicality being dominant in 21, and that's a view that we agree with as well. I just want to be mindful that the flows into the market's more cyclical corners have gotten remarkably aggressive over the last number of weeks here. Look at flows into things like industrials or financials or materials. And these are all sectors we like. I just want to be aware that we're not alone anymore. These groups began to inflect all the way back last June, last July. They've been leadership for 5, 6, 7 months here. I just want to be careful that sentiment's getting a little bit aggressive in those groups.
Chris, I don't know whether you have a view on Bitcoin or what it tells us, given some of the random moves, frankly, that we've seen with Bitcoin, but what it tells us about the state of the markets.
Yeah, I'm glad you brought that up, Francina. I think Bitcoin is the hood ornament of this liquidity-driven cycle that we've been in. And I think in terms of a barometer in gauging the market's view on risk appetite, on liquidity, Bitcoin, along with Tesla, along with solar, are remarkably helpful, along with IPOs. So we have this kind of composite that we look at to gauge liquidity risk. And it's Bitcoin, it's IPOs, it's solar, it's Tesla, it's all the speculative hood ornaments of the last number of months. And I would just point out, I think over the last few weeks, there are a couple little hints of weakness in some of those things. I mean, solar's come in here. We've seen IPOs soften. Bitcoin, obviously, the last 72 hours has been softer. That's worth keeping an eye on if we're beginning to see the first speculative